Well, good morning, everyone. Thomas Montgomery here. We get together with our distribution partners most weekday mornings. Now, granted, we didn't meet yesterday on Monday, October 2nd, but here we are on Tuesday, October 3rd. No place I'd rather be than with you as we go through our daily Zooms to train, to support, share strategies, tips, success stories, and really just figure out what it is that we need to do different, to do better, to support you, because you're the key. You're the cog to this wheel that makes it work. As a branch office, you are the interface out in the marketplace with the communities that you serve. Obviously, what we do is we help improve financial literacy for entrepreneurs, as well as providing access to capital. So what we do is important and it's needed, and thank you for the role that you serve. We're honored to be your vendor. Really, that's what we are. We're providing the back office training and support and programming so you can go out and help these entrepreneurs, and so you can generate a really good income. Each branch should absolutely be generating 6 figures a month. Some people say that, oh, that sounds too much, but look at small businesses. Go contact the local CPA office around the corner from your business and ask, what do you bring in per month? Most of them are bringing in 6 figures a month. Call the local chiropractor or primary care physician. What does your practice bring in? So businesses have a much higher earning potential than individuals. So I think that's one of the most important things, is for you to look at this as a business. You're the CEO of your branch, and to have a business, to be a business owner that generates 6 or 7 figures a month is not outlandish. So don't be your own greatest enemy. Don't be the constraint on your success by thinking that small businesses can't make a lot of money, because they certainly can, and you certainly should be, starting immediately. Today's topic is an important one that, after a fair amount of feedback from a number of you, we realized that one element of the system was broken and we needed to fix it. And we have fixed it, and here's how it works. So our topic today, and this is huge, this is absolutely huge for you for a couple reasons. So if you're multitasking, if you've got CNN in the background, you may want to just really focus in on this discussion, because it has a significant impact into your branch's success, your client success, and your pocketbook. So let's go through it. Outsourced Revenue Recovery Program. And I sent this agenda out to all of you in advance. We are pleased to announce a new resource for clients and distribution partners to address their uncollected receivables. Well, let's stop right there. If anyone doesn't understand that term, uncollected receivables, then the rest of this doesn't make sense. So let's stop there and make sure we all have a common understanding, a common vocabulary. So what are receivables? Receivables are monies owed. They're legal, they're ethical, it's part of doing business. It's when a client, a customer, owes you money for something, for some service provided. Uncollected, of course, means they've not paid yet. And so what we're doing is rolling out today the Outsourced Revenue Recovery Program to help you, distribution partners, as well as clients, collect their uncollected receivables. Now, we'll talk a little bit more as we go through the uncollected receivables that you may have, and also the uncollected receivables that we provide each client. So what is the Outsourced Revenue Recovery Program? Simply put, we've acquired a licensed and bonded collection agency that will collect the money that's owed to you. So it's like you outsourcing, or your clients outsourcing, the collection process. So you don't have to do it, or they don't have to do it. And again, you might say, well, what money needs to be collected? I'll get to those examples in a moment. But the bottom line is, we can get the money for you. You don't need to put time or energy into it, just bank deposits in your account. So how does this help? Well, it's kind of obvious, but it helps our clients and our distribution partners not have to go chase after the money that's owed to them. So now it's probably time to peel back the onion one more layer and define, well, what is this money that we're talking about? And that's covered under who would benefit. We have 3 different discussions here, so we need to treat each separate. So let's do bullet 1. We'll stop, we'll talk about it, and then we'll go on to bullet 2. These are each separate. So as a branch, you are out helping small businesses, aren't you? You're helping small businesses enroll in the credit and funding program through your branch. That's a matter of fact, I believe. Also, as a matter of fact, part of that value proposition is that every one of the clients that you enroll receive a $10,000 portfolio of accounts receivables for free. They don't have to pay anything for it. Well, why do we do that? Why did we include that into the credit and funding portfolio? Well, one reason of which is it provides assets on the balance sheet of each of your clients, so they have collateral for funding, because there's 3 C's. Remember, we've talked about that many times: credit, capacity, collateral. One of the 3 C's is collateral. So we don't want that to be a barrier. So automatically we provide collateral to every one of your clients that enroll in credit and funding. What if they don't pay up front, you might ask? What if they don't pay up front, you might ask? If they're just doing the financing, we still give them $10,000 of receivables up front. So that value proposition is strong, right? They could be signing up with you through your branch. They only pay $250 as a down payment. And yes, they're getting $10,000 of real assets. So this is an example of money that needs to be collected. Right? So every one of your clients, which ones? Every one of your clients that you've enrolled in credit and funding is sitting on a $10,000 portfolio. That looks good. That's accounts receivable on their balance sheet. That's collateral. But what would be better? What would be better than $10,000 of receivables for each of your clients? It would be $10,000 of cash, wouldn't it? We would all rather have cash than a receivable. So again, receivable is money owed. What does any responsible business owner do when you have receivables? You seek to collect that money. And you could do that yourself, or you could outsource it. Here, we're offering the Outsourced Revenue Recovery Program. So we'll talk about the process in a moment, but I want to pause for a moment. Is everyone clear on what we're talking about here? Well, Sylvia's not, and she's got the first question, so that's great. So she's asking, how does her clients receive the $10,000 portfolio? Well, here's how that happens. Sylvia, great question. Very practical, very relevant, very timely. So, as a branch, there are 4 elements to a completed client packet. You get the client under agreement, you get their payment in full or the down payment, you help them complete their PFS, you help them complete their soft pull, right? That's what completes phase 1. You know that. Once that phase 1 is completed, we have that client loaded in our system, and then we attach a tag in our CRM, and that tag says needs portfolio. And then we have a department that actually then assigns those receivables, works through you as the branch, and gets those receivables for your client. So it's fairly systematic. It's free. If you see a glitch in that process, let us know. AJ manages that, but all clients enrolled in your branch's credit and funding program gets this free. So why this is relevant right now is we can help turn those receivables into cash. Okay, does that make sense? Any questions? Thank you, Sylvia, for that. Anyone else have questions on why credit and funding clients should be using the outsourced revenue recovery? Well, Timothy brings up a good point. Could they do this themselves? Absolutely. Any small business owner theoretically should be capable if they're willing, to collect money that's owed to them. Absolutely. However, what we've seen is a lot of them are not doing that. And maybe it's not their preference, maybe it's not their focus, maybe it's not comfortable to them. And that's why this is offered. But one way or the other, if you're a branch, which I think all of you are that's on the training, if you're a branch and you're enrolling clients, which we sure hope that you are, each of your clients is receiving these portfolios. If they're not, you've got to get with AJ and figure out where the glitch is in the process, and we'll get that fixed. So no worries about that. But each client is sitting on a portfolio of receivables. That's good, but what's better? Turning that into cash. So you must, this is a strong statement, so forgive me, but you must, as the branch, be working with each of your clients to do one of two things. Either liquidate the portfolio that they receive, have them do it themselves, option one, or, which I'd recommend, getting them into our outsourced program, option two. But you don't want them just to be sitting on the receivables. You want them to be turning that into cash. Are we good on that? Okay, so that is category one of who would benefit. Now we're going to stop number one and go to number two. The second group of people that could benefit from the outsourced revenue recovery program are participants in the collateral support program. The collateral support program, also managed by AJ, that's where instead of just the free 10,000 portfolio, we're actually transferring over 100,000 portfolio. So it's 10 times the size. Well, why would a client want $100,000 portfolio? Well, probably two reasons, right? Now they have more collateral to qualify for more funding. So that would be reason number one. And reason number two, these are real receivables. So then we would turn around and help them liquidate that into cash. So this is the same as this, except this is 10 times as large. What would your client rather have? Would your client rather have a big asset or just a little asset? Would your client rather have $100,000 of cash being deposited into their account, or would they rather have 10,000? Now, this is not to be confused with the funding, right? The funding is getting the client's file put together so they can go borrow money. Borrowed money needs to be paid back. This money doesn't have to be paid back. So who would benefit from the outsourced revenue recovery program? The credit and funding program clients we've talked about, and secondly, the collateral support program clients. These two kind of operate the same. It's just the amount of portfolios they have is different. This one's included for free. This one's not included for free. All right, so then let's move on to the third category, which is you. You would benefit from this. Now, I'm not trying to sell you this to get you to do something, but I know without doubt that some of you have some clients that owe you money. Well, what kind of clients could owe you money? Well, there's probably a couple examples. Let's say you have a client, the client gets funding, and then they don't pay you the performance fee as they promised. Doesn't happen very often, but it does happen on occasion. And Eric and Veronica are on here, and they had that happen. We got this squirrely client of theirs who went out, and we all did our job. Clients received funding that they wanted, and the clients have not paid Eric and Veronica. Doesn't happen very often, but it does happen on occasion, and it sucks. It's not right. So in that case, what does Eric and Veronica do? Well, either they can spend their time and energy chasing after this incompliant client, which they certainly are capable to do, or they can do, frankly, what they already have done, is they sent that client over to us yesterday through the outsourced recovery program. And I'll talk about what we do with that in just a moment. But with that being said, we take care of collecting that money. So first reason that a branch office would probably want to enroll their incompliant clients would be the Eric and Veronica example. Client received funding and then didn't pay. So that's scenario one. Scenario two would be, let's say that you enrolled a client in your branch and then they didn't participate. They didn't get funding, but they didn't participate. Well, that's a violation of the contract. And due to the acceleration provision, now they owe you $10,000, which is 10% of the 100,000 guarantee. So if they participate and they have a capital raise, they owe you a performance fee. Most people will do what they say they'll do and pay, but there are some examples not, like we've talked about. Alternatively, is the other end, if they don't participate, they quit, they still owe you $10,000. Some of you either find this as foreign or you're not assimilating this. This is a big deal. So every client you enroll, you know you're going to get at least $10,000 one way or the other. Hopefully they participate, they get funded, and they pay you the performance fee. That's the preference. But if they enroll and they don't participate, they still owe you the $10,000. So in either of those scenarios, either you can go chase after those clients or you can submit those clients into the outsourced recovery program. So those are the three main uses of the outsourced revenue recovery program. Your clients that are enrolled in the credit and funding, they get the free portfolio. Now let's help them liquidate it. Number two, your clients that enroll in the collateral support program, 100,000 portfolio, let's help them liquidate it. Third would be branch offices, each of you, if you have clients that are not paying what they owe you. Make sense? All right, Ken's asking about the cost, and of course, we're going to go through that. So let's just pull the rest up. What are the services that are offered? So in other words, what are we actually doing in the outsourced revenue recovery program? So the first thing that we're going to do is typically send a demand letter. So we're going to do that. You don't have to do that. We send it certified mail, return receipt requested, so they have to sign off on it. So we're going to send a demand letter to that client to say, you owe the money, you need to pay it, and if you don't pay it, we're going to report it on your credit and or we're going to sue you. So not blanket threats, not being mean, but just saying we're putting them on notice. Here's a demand, pay it, or pay it voluntarily, or it's going to impact you. So that's the first thing that we would normally do. That's why it's bullet one. Bullet two would be the outbound calls, trying to get them motivated to pay. And the third is we can actually report it on their credit reports. And so that can motivate them to pay because that'll hang around for 7 years. So if they try to buy a house or buy a car, our approach to credit reporting is different than most. Our approach to reporting, they're not going to be able to use credit repair, quote unquote, to take it off because of the approach we use. And some of you have seen that. Some credit furnishing processes, you can easily dispute it and get it off. And those people say, I don't care, I'm going to get it off anyway. But there are some mechanisms of reporting where it won't come off. It won't come off. And so that's the model that we use. So that's the core of the services offered. What's the goal? The goal is to get the money owed to you if it's a branch office client, or money owed to your client if it's a debtor out of one of their portfolios. Now, what you may notice is there's not the litigation. We've done the litigation and we continue to offer the litigation, but the litigation's expensive because we have to pay the court costs to file the case and have the people served. So can we still do the litigation? And do we still do the litigation? Yes. Here we're rolling out something that's not price prohibitive, because to file through the district court with all the court cost as well as getting the debtor serviced, it's around $500 to sue someone. Here we're avoiding that by using other mechanisms. Hopefully that makes sense. But sure, we could still litigate them if needed. So then Ken, or whomever it was asking, I think it was Ken, the cost. Well, the way that the agreements are written in these portfolios, so rather it's a portfolio of a credit and funding client, a portfolio from the collateral support, or a client agreement default of yours as a branch, those agreements are written where the collection costs are added to the collectible amount from the debtor. So instead of it reducing the money that you're making, we collect that amount on top of what is owed to you. Therefore, our service is theoretically free, if that makes sense. I can give you an example if you need on that. But the pricing model is spelled out here, very simple. So you would pick, or your clients would pick, which files they want to submit for the outsourced revenue recovery. With credit and funding clients, when they're getting that 10,000 portfolio, that's typically 4 debtors owing 2,500 apiece. That's the norm. For the collateral support program, these are normally 10 debtors owing 10,000 apiece, just so you know. So there's normally 4 files in this. There's normally 10 files in this. So the client, if you will need to decide which files they're wanting to have us collect, and they would pay the processing fee for each. Well, why is there a processing fee? Well, we have hard cost, right? It's not free to send out these letters. It's not free to hire people to make these calls. It's not free to do the credit reporting. So there's hard costs that we need to share in with the client. So there's a $99 processing fee per. So is that a cost to the client or to you? Technically not, because remember, we're able to build that into the debt the debtor has. So now they owe $99 more than they did before. So ultimately, they're paying for this, but they're paying for it after we've collected the money, if that makes sense. We just do an even split of the monies collected. But again, we're kind of grossing up the amount. So let's go ahead and go through an example, because I think that's what Brenda's asking for. So let's say that, Brenda, you've got a collateral support program client. They have a portfolio of $100,000 that's been provided to them. And there's 10 debtors owing 10,000. So how much would we demand from each debtor? Well, we would send a demand letter demanding 10,000, which is the contractual amount, plus our costs. So that way we're grossing up the amount. So now that the client is in collections, they wouldn't owe just 10,000. They would owe 10,000 plus the collection cost, because our goal is to get the client the full amount that they're owed, because we're adding the collection cost to the burden of the debtor. Hopefully that makes sense. All right, how do we use the outsourced recovery program? Very, very simple. First, just email us. You have our contact information, of course, here. But you would email us a list of the files. So if you're a branch and you have clients that haven't paid or not participating, you need to let us know who you're wanting us to go collect from. If it's a client, we need to know, are they wanting us to collect all 4 of these accounts or all 10 of these accounts? There has to be clear communication of who's being put into the collections, of course. So then once we have the list, then we know how much is owed. So then we'll send an invoice over. And again, the client or you, whomever is participating in this, is paying the processing fee now, but we'll recoup that because we add that to the amount that the debtor owes. So then we will send you a document to technically assign those files so we can do the work. There is an asterisk, which means there's a note we need to see. So it is a 4-file minimum. And then our contact us information. So let's go through questions, comments, concerns that any of you have. This is a big deal, a really big deal, for a couple reasons. Every one of your credit and funding clients is receiving a portfolio. Let's help them turn that into cash. We want that to be cash, not just AR. Every one of your clients that's buying the collateral support program is getting a bigger portfolio. Let's help them turn that bigger portfolio into cash. Every one of you that's running a branch office, if you have clients that are either not participating or not paying, that's called an acceleration provision. They now owe you $10,000. Let's go collect that so you have $10,000 in your pocket. All right, so let's get to the questions. Trevor asked, what is the amount of the profile after turned over to you? I don't understand that question, Trevor. I could guess, but I won't. So, Trevor, could you re-ask that question differently? John asked, does the client split the amount collected with the branch or with you? Oh, that's a great point. So someone is owed the money. We're going to call them the creditor. So someone is owed the money. Credit and funding clients, those are the clients that you enroll through your branch. Your branch client is the creditor. Your branch client receives the portfolio. Your branch client is owed that money, not you, the branch, your branch client. Now, you can be a client too if you want, but the branch client's owed this money. So John's asking, well, who receives this money? Of course, it's the client that receives the money. It's their asset. Now, the alternative would be, of course, if you're a client, but on the branch offices, if you have a client that doesn't pay you or doesn't participate, then you're receiving the money. But there's no funny business going on, John. So someone has an asset, accounts receivable. They're allowing us to collect it for them. And then, of course, the money goes back to whoever owned the asset. All right. So Trevor restated his question. How much is the value of the file with fees? Well, you got to look at the agreement, right? Everything we do, Trevor, is in writing. And so if this portfolio is composed of 4 accounts, 4 debtors owing $2,500 apiece, that's the value, and that's 4 times 2,500. That's why we called it 10,000 portfolio. All right, so let's go on to the next question. Denise asked, will the $99 processing fee be returned for participating in the program? Well, yes, and that's what I'm attempting to describe, Denise, and it's my fault, obviously, if it's not clear. This means someone's outsourcing the collections to us, right? Just in one sentence, we collect the money owed to someone else, whether it be to your branch clients or to you. And in addition to the face amount owed, the agreements say that the collection costs are also a cost to the debtor. And so then we're going to collect that amount in addition to the face amount. Therefore, this money is returned to you or to your client because we're collecting that from the debtor. All right, hopefully that made sense. John asked about splitting the money. That's right. We do an even split of the money collected. That's the way it works, even split. Now, if you feel that you can hire another revenue recovery company that can do it more cheaply for yourself or your clients, that's perfectly fine. It doesn't really matter. We didn't develop this to be a profit center for us. We developed this to help your clients turn their portfolios into cash, because what we've been observing is a lot of them have not been very dedicated, proficient, or focused on doing that. And that's craziness when they're sitting on all that AR, especially these folks that are enrolling in the $100,000 collateral support program, and they're sitting on $100,000 of receivable, and a lot of them are not doing anything. Now, they could do the same thing that we do, right? It's not like we have some patented secret. I'm showing you the steps we go through. So you could do this for your clients could do it for themselves, but the money needs to be collected. Ken asked about, is there interest? We have late fees that we charge the debtor, but not interest. Good point. Eric says, if a client invoices on their own, are they likely to get the funds? Well, I mean, hopefully so. Yeah, these are real debts, and so Eric's exactly building off the point I just had. Here's what we're doing, and so if you want to do this for your clients, or you want to teach your clients how to do it themselves, that's perfectly fine. It doesn't matter to us. So Trevor's coming back. So yes, the contracts typically, so the defaulted, these receivables are real. They're defaulted contracts that we're collecting off of. And I believe all of them have $25 a day late fees. That's what Trevor's point was. And so, yes, we're collecting off of that as well. Those are legally enforceable. All right. So Tina asked, if the $99 processing fee is not enough, will the client be able to pay to Oh, okay, great, yeah. So we'll go through this, and this will work in most cases. But Tina's question is, could they escalate it into litigation afterwards? Yeah, certainly so. So that would be a separate step if needed. And then, of course, in that case, they would pay the court cost. All right, well, we covered a lot of information, but let's just wrap it up here since we're at the bottom of the hour. Today, we rolled out the Outsourced Revenue Recovery Program. This is a big deal to every one of you. And if you don't see that it's a big deal, I guess it's my fault, but you need to go back and maybe listen to this recording. Because all of your clients, which ones? All of your clients are receiving portfolios. All of your clients are receiving portfolios. All of your clients need to be liquidating those portfolios and turning the AR into cash. Which ones of your clients? All of your clients. So they can do it themselves. You can do it for them. I don't care. But if you're not doing it for them and they're not doing it, then allow us to do that. Because I promise you, if you ask your client, hey, client, would you rather have 10,000 in AR or would you rather have 10,000 of cash? I think every one of them is going to say, I want the cash. If you have clients that you've enrolled in the collateral support program and you ask every one of them, hey, client, would you rather have 100,000 of receivables or 100,000 of cash? I bet you every one of them is going to say, well, dummy, I'd rather have 100,000 in cash. We have to liquidate receivables. It's irresponsible to own a business, to run a business, and let your AR just sit there. So if they have the capability to liquidate it, great. Problem solved. They don't need this. That's my pleasure. But if they don't have the capability to do it, then we need to get your clients plugged into this so we can turn their AR into cash. And this is money that doesn't have to be paid back. It's not a loan. There's no performance fee on this. These are receivables, accounts receivables owned by your client, monies owed to your client. So hopefully that was helpful. I sent out a reminder email this morning. I encourage you, I pleaded with you, each week, each of you that are branches, we should be having scheduled weekly one-on-one calls. I've pleaded with you, and I continue to plead with you. Do that, schedule, so we can review every client. Where are they? Are they happy? Are they getting funding? What needs to be done? What questions or concerns do you have? We need to support you, but it starts with you attending these trainings, which thankfully 429 of you are on, so that's great. And then it also means you scheduling the one-on-one sessions. Many of you aren't. Many of you are missing out on what we ask you to do, which is let's have a weekly one-on-one session. All right, well, thanks everyone. We'll see you back tomorrow morning, same time, same place. Let us know what we can do to help you. Bye-bye.